We are just about a month and a week into 2023, and investment experts are divided whether 2023 is the year to invest in stocks. Some are quite optimistic, others very pessimistic. If you are an investor in the financial markets, you may want to pay attention to today's episode because I'll share with you my personal opinion on this matter. Hope it will matter to you, and my rationale for this opinion. Hello, powerful people. Welcome to the More Money with Millen, a show that is kind of operating manual for creating your best rich life. I'm Millen Livis, holistic financial independence mentor. I help people have more money with less risk and less stress. And don't we all want this, right? If you're constantly worrying about money and your financial well-being, go to speakwithmillen.com and schedule your private complimentary never worry about money again strategy call. I'll help you identify your blind spots that might be causing your biggest money problems. And I will also tell you how you can create your unique path to financial independence. Do not waste your time waiting for better timing. When it comes to creating your financial success, time is really of an essence. The sooner you address your money problems and start aligning your choices and decisions with your financial goals, the sooner it will happen, and the higher probability is that you will achieve them, that it will happen. Okay, let's talk about investing in the stock market in 2023. COVID pandemic caused the initial shock to financial markets across the globe, right? However, the inflation aftershock, for many reasons we experienced the inflation. This inflation aftershock was even more painful to global economies than the initial pandemic-induced catastrophe. Here in the United States, stocks, bonds, cryptocurrencies, and just about everything else had a terrible year in 2022. Most retirement accounts got halved. 401ks became 201ks, right? The devastating effects of the pandemic and pretty much unrestricted, often reckless government spending led to more financial pain in 2022 than even the initial pandemic-induced 2020 market crash. But today, I want to share with you good news. You know what? We have a lot of challenges, economic challenges happening right now, and I'm very happy to share with you a little bit of a good news today. The biggest causes of 2022 financial pains might be over soon. Of course, I don't have a crystal ball, so please do not message me for specific investment predictions, right? But I have reasons to believe that the losses that most investors experienced in 2022 are going to be over in 2023. Because the issues that caused the financial disaster in 2022 may end in 2023, which means that stocks could climb higher, possibly even hitting new highs in 2023 and 2024. So let me share with you two reasons I believe that the stocks may soar in 2023. The first reason is that inflation is slowly decreasing. I'm sure you noticed that inflation became a part of casual conversations as we experience in price hikes in grocery stores, in gas stations. I could talk for hours about the effects of high inflation on common people like you and I, from eggs to milk to cost of loaf of bread. But that's a topic for another show. Personally, I kind of like to see people getting more interested in financial conversations, to be honest with you. So let's talk about why we may have better year ahead. Let's look at what happened and what might be coming next. So because of high inflation, I think it was 9% here in the US at some point, I think it was June or July 2022, So because of high inflation, the Federal Reserve was forced to hike interest rates to cool off the inflation. That's what Federal Reserve does, right? Apparently. As the result of the rates hikes, stocks and bonds lost trillions of dollars in 2022 with a T. And because it's a human nature to make assumptions about the future based on the recent past experiences, almost everyone now expects the worst market trends to continue with possibly even worse consequences. It's a human nature to make assumptions about the future based on most recent past experiences. However, it might be a wrong assumption. The negative economic shock from the pandemic is nearly over. And the inflation is slowly falling, which means the Fed will be able to ease up on its rate hiking spree that it had for the past several months. Okay, this assumption is critical because most financial markets problems in 2022 were caused by the spike in interest rates, because Fed was increasing interest rates often, several times. It caused the stock market sell-off because stock prices fall when interest rates rise. It caused the bond market crash because the high rates drove bonds prices down. Okay, and also it caused the housing slowdown because mortgages almost doubled. Mortgage rates almost doubled in 2020 from 2021. And it seems to me that many financial analysts and financial commentators, expect those massive rate hikes to continue. And frankly, the assumption has good reason behind it, because historically, the extreme inflation doesn't fall until the Fed control fund rates rises above the current inflation rate. Okay, and we're far from that point right now. The December inflation data show that year-over-year inflation growth hit 6.4 in December, right? That's down from the high 9% we had in June or July 2022. But it's still way above the current Fed's rate of 4.25%. Current interest rate, right? So it's understandable that most financial analysts assume that Fed will continue hiking rates to cool off the inflation. But, and it's an important but, in the last 6 months, since the inflation peaked at 6%, 6 or 7 months, right? Since the inflation peaked at 9%, the month-over-month inflation growth has been dropping. And the December inflation data was down versus the prior months. I want you to remember this. The change in inflation trajectory is the key indicator of whether stocks will rise or fall this year. Okay? Inflation trajectory is essential for identifying what will happen with stocks. When inflation rate is rising, stocks are usually falling. Therefore, it's not the best time to invest in stocks when inflation is rising. However, when inflation is falling, it's usually a very important time to start investing in stocks. Okay, so that was reason number one. Let's go to reason number two. Reason number two is the market almost never fall for 2 consecutive years, right? Most of the time, stocks follow a losing year with a good year of returns, most of the time. So stocks' historical performance record shows that gains in the stock market in 2023 are likely. And I would say even double-digit gains are possible in 2023. Therefore, we may hit new highs by the end of 2023, beginning 2024. And I think it's even more likely because almost no one believes that it's going to happen, because most investors are focusing on last year's pain. Again, it's a human nature, it's understandable, but the less people expect that it will happen, the more probability that it will happen. However, there is one more unknown scary factor, and I want to address this. And this factor is a recession. Okay, recession. And I'm sure you heard the R word on the TV, radio, because some economists are talking about a recession. While there are some valid reasons for expecting the recession in 2023, reasons like high cost of capital, still high cost, right? Lower consumer consumption, continuous issues with supply chain, complicated, to say the least, geopolitical and macroeconomic environment, there is a chance that we'll avoid the recession or have a soft landing, even if we have the recession. And here's why. Again, I'm just sharing with you my opinion. This is not obviously recommendation or predictions, right? It's just my opinion. So here's why I think that we may have a soft landing. The job market in the US is quite strong. Okay, unemployment is still incredibly low. And while many companies are downsizing, we are not seeing the massive layoffs that usually happen during the recession. Okay. In fact, many employees are still looking for workers, for qualified workers, and it's not always easy to find. Plus, falling inflation is a good sign for the economy. Finally, almost everyone expects a recession right now, right? Like when I listen to the commentators, like most of them mention the R word. And when everybody is certain of a particular outcome, it's less likely to happen. I'm not saying that we will dodge the bullet and avoid the recession with 100% guarantee. I'm not saying that at all. What I am saying is that we have a good chance to see the change in the stock market's trend to upside later this year. And while it might still be very scary out there, it might be a good time to learn about strategic investing and managing investing risk and strategic asset allocation. Okay, do not allow your fear or your fears keep you out of the incredible opportunities that might be awaiting us ahead. And that's all I have for today. Again, if you worry about your financial future, your retirement, go to speakwithmillen.com and schedule your private complimentary. Never worry about money again strategy call with me right away. I'll help you identify your blind spots that might be causing your biggest money problem. And I will tell you how you can create your unique path to financial independence.